Man, there's a lot going on today, guys. May 29th, 2019. It's actually Wednesday. I don't know why it says Tuesday here. 13 market moves daily, guys. Let's roll. Let's get ready for a huge day. We're finally out of the trading tunnel. And guess what that means? That means ton of trading opportunities because, guys, trading in the tunnel could be boring as hell. Sometimes things just don't move. So finally, we're getting the first day out of the tunnel where, everything is selling off. So yesterday we're making observation how they were selling tag, but they're buying dividend yielding stocks. Well, yesterday it didn't matter. They were selling everything. Apple continues to sell. Guys, after the market retested our narrower defined range of 2840 started dropping. So breaking key levels of 2805, 2799 pre-market, showing move 6 behavior into the close yesterday. And with all of that, there's no serious buyers at these levels. It's kind of like Bitcoin when it was dropping from 20,000 all the way to 6 and nobody wanted to buy. By the way, Bitcoin popped, and that is actually the only concern that we have, that the market is not going to drop substantially, yet we are expecting it to actually drop from here ultimately over the course of the next few days to a level of 2711, 27,665. But watch out, guys, not so fast. Expect a bounce. So after we open, yes, we are going to open lower today, but expect a bounce. And a lot of move 3, which exactly what we projected yesterday for today and what we're projecting again this morning, observing all the action. It's likely to be a move 3. It's got the highest probability. But in a lot of moves 3, we gap down. We try to close the gap. So that's going to be your ultimate point to actually short. So expect a bounce, a retest, not necessarily of 2805, but expect the market to try to run higher. Maybe get to a level of 2795, 2799, 2800 would be a perfect level to actually buy puts. Okay, so with that said, again, we're looking at possible 3 days lower in a row, depending on how the volume of the VIX holds today. We're going to check it out in just a second. Earnings today, workday, YY, some cool trades that are coming up. Move 11 behavior, still observed everywhere, guys. You can pretty much look at any chart, and guess what? What we've been observing since last week, that indexes keep remaining under the blue, still remains true. However, it's just getting more and more bearish. So remember where we started last week? A few days under the blue line right here, under the 50-day. Then we moved in a little bit of a crazier situation here. Man, and then another day under the blue with a black candle on Friday. And then guess what yesterday? Damn it. After that black candle, we're getting a solid day lower retest of that level. 2802 is where technically close. So soon, your question is, where are we headed, Leonardo? Forget about the chart. Just tell me what's going to happen next. So this is what we think is going to happen next, guys. We could be heading to 2750 first, then 2711, then 2665. Now, the idea, it's not like we're going to drop today to 2750, then tomorrow to 2711, and then 2765 on the third day. Nothing drops in straight lines. So remember, your goal as a day trader, as a swing trader, to catch the best entries. And your best entries when you're shorting stocks, when you're buying puts, remember, short the bounce. It's that simple. Okay, so Amazon. What's going on with Amazon? Remember a few days ago it said, oh my God, Amazon broke this blue line, so there's probably going to be more selling coming in. It really made an effort to bounce out. But what we've observed yesterday, right, only 8,000 shares pre-market was trading when Amazon was trying to go higher. However, when the market opened, it was a bit puzzling because it did make a very bullish move right above the 2840, got to 2845, and ultimately 2847, which technically was trying to close the gap that created right here. But it failed. It looked like the volume was coming in. At one point, we had suggested buying Amazon puts, but as soon as it reversed, we had to get out of those and reverse them into puts. Guys, these are key important observations. Now, Amazon is officially third day under the blue line. So first, we observed the S&P 500 index being under the blue line consistently. For those of you that are new, when we observed that, that is bearish, guys. The longer the indexes cannot bounce above some critical levels, like the blue line, which is the 50-day line, or the orange line, which is the 200-day line, that's bearish as hell. So now, technically, Amazon has been stronger than the rest of the market, but now Amazon is giving in, and even on Amazon, we're not seeing some strong buying, even pre-market. Pre-market, it's down concerningly on low volume, but, it's going higher in low volume. yesterday, and it was able to make a rather decent move to the upside. So I think the fact that it's falling on lower volume this morning shouldn't stop it from maybe hitting 1800. And then watch out on Amazon if we actually are going to break below this 1800 level on Amazon. If we are, remember last week we pointed out these levels on Amazon. Where was it? 27.56. So that's where we're ultimately taking up our short position in Amazon. Hopefully Friday we'll get there so everybody can make a ton of money. So not only is Amazon trading down the blue 50-day moving average line, but 2 black candles in a row. So black action. Guys, this is time to come in and get strong today. Get strong on building your put positions. Remember, don't short at the bottom of the daily range, short at the higher daily range. So here's the tunnel that we've been in, right? The 2890 tunnel to the 2800 tunnel. We've been out of that. We moved into, as indicated yesterday, into this tighter tunnel. Now, ultimately, we didn't expect the break below the tunnel that fast, but it did happen. So typically, it could take a few days. But the fact that we've just pre-market given in these things, and when I keep saying, guys, move 11 everywhere. Like, look, this slides that take forever to do, so you should be able to plug in the tickers from your winning watch list. Everybody should have the winning watch list by now. All the tickers like, you know, Nikkei, the Japanese futures, the Hong Kong futures. If you look at them pre-market and post-market yesterday, guys, they're all moved 11s. China is falling. Everything is falling pretty much everywhere. Europe is falling. Not a whole lot, but these moves 11s are like they're everywhere. So ultimately, we're breaking below that level. And it's actually, if we take a closer look, we're breaking. Yesterday was the first day. If you pull up the one-day chart on stock charts, you plug in SPX, you're going to see the red bar yesterday exceeded all the previous bars on S&P 500 literally for the last month. Not by a lot, but it's definitely higher. So what that means is we were actually moving lower below the 2805 into the close on higher volume, which is key to determine whether the level is seriously going to be broken or not. So everything's pointing to the fact that we are going to break that level. And what you want to do is remember, by 10, 15, a lot of these move 3, they're going to try to come in and close the gap. So far at the point I'm recording this, we're down about 14, 15 points. So at a level about, 28.86. But, we could easily bounce closer to this 2800. That's where you want to come in. That's where you want to buy puts, guys. So steer step, don't buy all of them at once, and just be ready to short the bounces. It's on. So considering workday puts, guys, today, look at this beautiful move 11. And for those of you that are new, guys, you know we do not short stocks heading into the earnings because you're going to be tempted to buy a lot of options out of the money. Clearly, we are going to be bearish on workday today, but look at these levels. So far, it's trading like $210. Well, yesterday it closed like 212, 213. So overall, the drop is not significant. So for those of you that might have bought like 200 level puts, I mean, they're not going to be worth as much as you paid for them yesterday. So we're not going to spend a whole video talking about this, but if you personally have questions about why these options depreciate so quick and why we don't trade them, I've explained a ton of times. So reach out to me personally. I'd be happy to go with you if you want more clarity on this. But the point is, we want to short it today. And when do we want to short it? We want to short it in the bounce. So key observation, hit a high of 219.9. Why do we want to short it? The report is excellent. The sales are up. The growth is like 59% a quarter over quarter. Everything looks good. Well, they already started selling it going into the close. See this black candle, black bearish reversal candle, failed rocket launch. Guys, if you haven't started the charts and divergence course, you need to understand this information to be able to look at stuff like that and see the winning trades. So here's the deal. Prior to yesterday, which is tricky, I know this is a gray bar, which would technically represent the buy volume, but in reality, it should be a red bar. That's how confusing things could get in the stock market, because this is a bearish reverse candle. So what looks like they were buying the stock, they were really selling headed into the close. And this is actually how we know, because the accumulation distribution was going lower yesterday, as it appears that the positive volume was going higher, and in reality it was a sell volume. All the prior volumes were here. This is why we were bearish on the cloud stock in the first place. Yes, they are announcing great earnings and so on, but great earnings does not mean the stocks go higher. As a matter of fact, it is highly expected, and this is why this stock in particular, workday, is already up like 100%, in the last 12 months. So, I mean, I remember when this thing used to trade at 80, 90. I remember this thing used to trade at 120, 130. Well, at 219, I mean, trust me, there's going to be some profit taken, especially on a day where we're experiencing a move 3. So, with that said, guys, be ready to short this thing in the bounce. We got clear diversity. Look, it was trading right here at 200. It goes to 215. But the strength of the stock, as indicated here on the RSI, is actually going lower. So we got the diversity on the RSI to confirm our bearish case. So make sure, let me just cover that. Since it established this high, right? So we could open and it could drop like a rock. We could open and it could actually bounce to 216, 218. So ideally what you want to do is you want to buy 220, 215 puts if you want a high probability trade. If you want a crazy trade, just go ahead and buy 210s, 205s. And our first target is 200. Now, I wouldn't be surprised if the stock actually fell to a level of 187.5, 191.5 by next week. But, you know, don't expect to do it today. Okay, next stock we're considering shorting is YY, 70 puts. Why 70 puts? Well, it established a high of 69 after reported earnings. Earnings support is equally strong, but we think some profit taking is going to take place like we've seen pretty much across the sector with all the Chinese stocks. YY is one of those in the Chinese sector. What do we see in this chart? Well, chart is bearish as hell. Remember, I've recently been talking a lot about these gap downs. Here's gap down 1, gap down 2, gap down 3. All these bearish reversal candles, 1, 2. I mean, look at them all over the place. Clear divergency on the RSI as the stock tries to move higher, so bigger drop. But we think it can still drop to which level? Well, 57.5, 60. So the accumulation is definitely showing to that. And look at this. Remember, we were talking about, even though this is a bullish crossover, well, what we got is a situation we got a bearish crossover, possibly right here. Anytime you see a blue line, it's getting close in the range to the orange line. Expect this crossover to happen in the near term. And if we take a closer look at this. Here's your hook. Guys, check this out. Blue line on the other time frame chart is actually terribly close to this orange line. So we think that crossover could happen over the next 7 days. And if that does take place, we want to come in and want to buy this 70 strike puts. Do you see this orange line is at 69.88? How surprising that pre-market, take a look at this photograph one more time. Pre-market, it hits a level of 69. Not 70, not 70.5, 69. 69 meaning it is exactly the level right here of the orange line. And it's the hook. So you want to buy the 70 strike in the expectation of the stock dropping all the way, retracing back to 63, 60, possibly 57.5 range. The bearish move is also confirmed in the MACD on the accumulation. Guys, should be a pretty easy trade right here. Now, market move yesterday. It was a clear move 2. We pop, we drop. Clear behavior. Move 6 going into the close. Huge volume was coming in as you guys have been watching the market actively in the last hour. Boom. So what we've said in the video exactly took place. So once you've gotten confirmation of that, guys, that's when you should have started building heavy positions. I know early in the days we're trying to get a little elaborate there in a couple of calls. Now notice that the call positions we took on Tesla and BYD, these stocks actually have a negative correlation in 90% of the cases, meaning when the markets fall, these are the stocks that could actually go higher. So notice we didn't, go crazy on the calls and anything else. As a matter of fact, we were buying calls heavily in a lot of things, including the cloud sector. So if Workday indeed is going to stage a drop at the open to maybe 205, 200, expect all the stocks, including Splunk, and you got the list. Go look at your winning watch list. All of them are there, guys. And it should be pretty easy trades put together. This is how move 2 looks, right? So we pop, we drop, and we finish in the negative. So that's why it's different from sort of a move 11 behavior that we've seen, but in a way it is a variation of move 11. Move 2 is a highly bearish move because there's no buyers basically coming in on any volume when stocks are moving high. But look at the volume spike into the close. So the volume on the sell side exceeding the volume on the buy side. Look at the accumulation distribution. Boom, low, and nothing going on pre-market. Nobody's buying. Okay. 2-day sequence, 11-2, bearish as hell. We got, here's your 11, here's your 2. Okay, as you can see, the both resemble these stopping moves. And your 5-day sequence is going to be 7, 11, 3, 11, 2. Guys, man, the Bears are back in control. 7, 11, 3, 11, 2. And guess what we're expecting today? Another 3, which means in tomorrow's video, if the move 3 confirmed, look, on the 5-day sequence tomorrow, we may not actually have a green move. They may be all red, which tells you what? Remember I showed you a slide, guys, yesterday, how in 68% of the cases in the month of May, we were experiencing bear moves, and they're not moves 3 and 2, they were predominantly move 11 is in control of the month of May, which is a topping move. So now we're starting to see this moves 3 and 2, which tells us the bigger drop is near. Okay, now we got that covered, guys. Here's how the 5-day sequence looks in the chart. And VIX, guys, man, VIX sure tricked a lot of people, right? But finally, it looks so weak, right? It's kind of like The Usual Suspects. Have you watched the movie where, you know, the main guy that stages everything in the movie, right? He's the one that, you know, can barely walk. And he looks like he's the weakest link among all this, you know, guys, but you know, he's the one that stages everything. So that's how weak VIX looked just for the last couple of days, and finally it strikes. It's kind of like a big master plan here, and finally hits towards the end of the day 17.7 and finishes really close towards the end of the day. And so far, pre-market, it's above 18, which is crucial because if VIX maintains a level above 18, that tells us there's probably enough sell volume that's coming in to get us to a level of 26.65 on S&P 500 in the next 3 to 5 days. Awesome stuff, guys. And what do we know from studying the 30 markets move formula? There's only one condition only when we should be buying puts out of the money. And that is when VIX is numerically high, above 16, and uptrend is confirmed, which got both conditions met. So, guys, this is the time where it's okay. It's okay to buy puts out of the money. All right, so here's the deal. This is what we just talked about. VIX pre-market above 18, holding, hit 18.75, huh? 18.28 right now. If VIX holds above 18, expect multiple days lower. That's the verdict. So next market move we expect for today is a move 3. Focus on shorting the bounces closer to the level of 27.95, 27.99. So key takeaways. Lower range on tunnel is broken. Thank God. Now we can trade like rock stars. Now we can make some real money, guys. Short bounces all the way. Okay, when markets drop, you collect profits. When markets bounce, you open your put position. They drop, you collect profits. They bounce, you put on your put positions again. So watch for move 3 at 10 to close the gap by 10:15 a.m. and short the hell out of it. Guys, with that said, have an awesome trading day. Have an awesome trading week. Make it happen. Have your accounts grow. Have fun doing it. I'll see you guys in tomorrow's video.